Hello everyone and welcome into the channel. My name is Brent. I've owned rental properties since 2018, and while there have been some ups and downs such as cash flow, rent increases, and appreciation, there have been also falling trees, tenant accidents, and rising costs. So would I still invest in real estate in 2025? Let me go ahead and walk you through my honest answer from someone who is still invested in real estate. So we're going to go ahead and cover, is real estate still worth it in 2025? My real journey, wins, mistakes, and current market view. It has been a long time since we've really talked about real estate on this channel, my overall real estate journey. So we're going to go ahead and do a brief summary here in today's video. If there's any specific questions you guys would like to have answered or talked about, go ahead and drop them down in the comment section down below. Also, we are looking to hit a goal of 6,000 subscribers. So if you guys are interested in stock market, real estate, dividend investing, definitely subscribe, give this video a big old thumbs up, would really appreciate it. And let's go ahead and go over my real estate journey. So my original home was purchased back in 2013. I had just moved back into the States, having just came out of the military. I owned no car, no house, nothing. Got back into the States, made my first home purchase in late 2013. And invested the rest of the capital in the stock market. I used those 5 years between 2013 to 2018 to build up capital, and then had been researching using Bigger Pockets and other platforms, books and such, right? Up until I decided to make my very first rental purchase in 2018. Interest rates being around 3-4% at that time. So I went ahead and purchased my first rental property in 2018, September, and then followed up. I took out a HELOC on my primary home because all the cash that I had invested into my first rental property was basically stuck in that until I was able to rehab it, refinance it, and then take all that capital out. So I was able to do a HELOC, purchase up a duplex along with it, and do that whole process along with that, which took just a few months overall. I think during the whole process, I purchased a home and rented out the home all within about 2 or 3 months. It went really quickly. And then between 2018 and 2021, not a lot of activity had happened. I was trying to rebuild up my capital. Also, the stock market had been doing pretty well during that time frame, and I didn't want to pull the capital out of the market and then move it into real estate, which was also doing really well during the same time. But here we can see in the time frame where I purchased that home and where it is today, it's appreciated roughly $134,000. The other one, the duplex, has appreciated right around $120,000. And then my recent home purchase here in 2021 has appreciated around $93,000. So overall, real estate has done really well for me in not only appreciation, but also cash flow, which we'll talk about here in a moment. So some pros of real estate investing: there is monthly cash flow if you buy it right. It is very important when purchasing real estate. Do not just purchase real estate just for appreciation, because appreciation, which I'll go ahead and showcase here in just a moment, is not guaranteed. Appreciation over the last 3 years has been basically null, but there is also rental appreciation. So whenever you purchase a home, you'll rent out your house at that time for what is standard in the market. And then over time, you'll probably increase rent anywhere from 5-10% or so, depending on your state. Also, there's long-term inflation hedge. So just natural inflation on the property on a yearly basis is pretty normal. Also, there's tax benefits and leverage. So the majority or all of my real estate that I purchased, I was able to purchase it at a set price, rehab it, and then refinance it, taking either very close to my initial investment. So basically with being able to withdraw all of my initial capital myself, or actually being able to withdraw more capital from the investment that I initially put into it. That is just kind of left into the property, and then I was able to withdraw all my capital and invest it into the stock market during that time frame. So it's been doing double whammy, right? So it's been really good overall benefits of real estate investing. So has been the cash flow. So a quick rent growth snapshot. When I purchased the homes in 2018, it was late 2018. I think it was September, October timeframe, 9 and 10 months. It took me a few months to get those property turned over to a property manager, letting them fix up the home, getting them contracted to get tenants inside, So 2019 was my very first year of getting cash flow. And initially, when I went into buying my properties, I wanted to have an average cash flow per month of each property of about $200, which is how it worked out. My first 2019 cash flow was about $200 average monthly. Skipping ahead a few years, you're right, 2020, 2022 was pretty wild in that time frame. Everybody stayed inside. I didn't have any tenant issues at that time. And our average, the average monthly cash flow was around $500 per month over after expenses being covered, such as mortgages, utilities that I pay for, trash, and then property management fees and stuff like that. And then started beginning to raise prices beginning in 2022, 2023, and so on, right? Just a slow, steady rise. And also doing a lot of rework on those properties, either fixing up the roofs, redoing the siding, painting, and such. And that, by doing those little jobs and then having tenants being switched in between, often was able to increase the rent. So 2023, I saw cash flow average out about $900 a month after expenses being covered per month. 2024, this last year, 2024, I actually ended up losing quite a bit of cash flow when I did the averages out. I averaged about $472 of cash flow per month because there were some really big repairs that I had kind of put off on one of my initial properties that I purchased. So it took me about 5 years or so to finally do some of the siding on one of them, but it was a really big project. And I was in the hole in that property roughly about $10,000, but the other properties were able to help, cash flow everything, covering the expenses of the mortgages and all other items, right? So now all properties at the end of 2024 are doing well. They're all completely fixed up to the point where so far 2025 cash flow over the last 5-month period has averaged around $800 so far, after expenses being covered. So just by kind of focusing on cash flow first versus appreciation, it's helped maintain having less stress. Knowing that I focus on cash flow first did help me quite a bit. Just kind of not relying on appreciation, because appreciation isn't guaranteed. Now, there were some major real estate challenges during the time frame, so we'll talk about 2 key items from my portfolio here in just a moment. The first was a tree incident. So I got a call last year in 2024. We had some super heavy snowfall here on the West Coast, and our tree that had been maintained, trimmed back. We got photos of it and pay stubs, right, of having this work done. But that was super heavy snow on the limbs, and it just so happened that one of the limbs had enough snow on it that it cracked and broke. And then I got a call from my property manager saying, hey, the neighbor called us and said that one of the limbs from the tree actually fell in their garage and put a hole on the top of their garage. And luckily it didn't. Nobody was hurt. The garage is far away from the actual home. It's a detached home, detached garage. But this is just, I talked to the insurance. I said, because it was an act of God, it was not on our end. The homeowner on the other end, I called them, we talked on the phone. He had just let me know that he had just closed on the property less than 2 weeks ago. Let him know that was unfortunate. I'm very sorry. But my tax, my insurance said, hey, let the homeowner's insurance cover it. It's not going to be an issue on your end. It's just a big lesson in weather, liability, preparation, making sure that you're always crossing your I's, dotting your T's, making sure that you always have pay stubs and doing regular maintenance on your properties. If it is an area that has a lot of, weather related incidents, potentially kind of prep for that, trim down hedges and stuff like that. So that was one of my first major incidents that I'd had in the first 5 years of owning a home. The second biggest thing that had taken place was a tenant passed away in one of the units. An elderly tenant passed away in one of the units. Unfortunately, got a phone call from my property manager letting me know, hey, it took place. It wasn't an accident. It was just that time. It was an elderly tenant. The property manager hadn't talked to the tenant in quite a while, and they had contacted the police. They contacted me, letting after they found out what had happened. Family had to get involved after the police did their investigation, making sure that there was no out of the ordinary that had either happened to them from the property. all that stuff, right? And then the family was called in, they cleaned out the property. Cleanup had been handled. It took about a 3-month process. And in that time frame, just vacancies happen from time to time. It's pretty normal, especially in these situations. There's nothing that can really get around it, right? That was one of the first times I had dealt with anything like that, and it's very rare, I would suppose, unless you have tons and tons of properties. I'm sure it'll probably come across, a little, happening in your time frame. Now, so yeah, some other cons of real estate are the 6 to 8% interest rates. I recently did a snapshot of where if I had purchased my current home in 2021, I purchased my primary home at a rate of 2.75 versus if I purchased my primary home in 2025 with these current rates of around 6 to 8%. That would be a $900 increase on a monthly basis, or over the course of a year would tally up to over a $7,000 difference on my primary home. And all my rental properties, right? You always get, there's the 6 to 8% depending on your credit score for primary homes. But if you are doing an investment property, those interest rates are generally about a tick higher. So buying rental properties in 2025, trying to get appreciation is very irregular, right? There's also expensive costs that can come in, especially in 2025 with tariffs taking place. And a lot of the equipment that you're ordering could be potentially from overseas with rising costs and expensive and delays. If you're trying to do any sort of roofing, siding, anything like that, it just can offer a ton of rising costs. And these can lead to vacancies as well. If you're trying to do some expensive repairs, you might not need a tenant in there at that time. You might have to pay for them to, go to a place to rent for themselves for the time that that property needs to be vacated, and then you'll be covering the vacancy of the property while also covering their fees as well, right? So I also had a snapshot in here a bit earlier talking about the appreciation. Essentially, since 2022, there's been very, very little appreciation across all homes. So 2022, the second property has done fairly well. It's gone up and down with appreciation, which is kind of the groove of the majority of the homes here. In general, if you look at the last 3 years of properties out there within the US, they've essentially kind of plateaued as of 2022 with these rising interest rates that's really stopped a lot of homeowners from selling out of their current homes and trying to buy into new homes and trying to get new buyers into new homes as well. It's been a really crazy time these last few years. So would I buy again if it were today in 2025? I'd be very cautious. I'd be super cautious buying today because, again, you're not buying for the appreciation. I would never try and buy anything for appreciation right now. And there's even less cash flow out there available. When running numbers, I've been looking at numbers for the last few years, always trying to buy more real estate if I can get it at an opportune price. But with the rising interest rates, there's just a lot more risk coming with it. You have less cash flow, which leads into, also not a lot of appreciation isn't guaranteed. So overall, it's just very cautionary time. There may be a few individuals out there. If you guys have bought any rental properties, let me know down in the comment section down below. I'd be really interested in finding what how appreciation, how interest rates have been up for you guys. I've actually been talking to my buddy who also joined real estate investing right along the same time as me. I kind of nudged him into buying his first real estate properties, and I've been kind of talking with him, letting him know I would like to get rid of this property right here. I could potentially sell it off after all expenses. I'd still walk away with a good sizable amount. That sizable amount could then be invested in the stock market and appreciate, reinvested, and used for dividends and stuff like that, right? So right now, I'm waiting till the end of 2025 to see if my single home property is going to be worth keeping around after having made all those changes and fixes and spending that money to get it fixed up. I'm going to take this year to see if the net income is worth it at the end of the year. How did it do in comparison to the other ones? Or do you think that it's a good time to just kind of sell it, walk away, take that capital and invest it into something a bit more passive? Because real estate investing, as a lot of people like to sell it as a passive investment when working with property managers, is not a very passive investment. I would probably It's done really well for me in that time frame that I've owned them. But now, looking at it here, 2025, 7 years or 6 years later, I would probably be taking the cash and reinvest it into the stock market as it's more liquid. It is oftentimes a little bit more reliable. So, advice for new investors: run your numbers tight. A big tool that I used early on was using Bigger Pockets. They have a calculator on there. It is a paid feature though, so there are other calculators out there. If you are looking to get into real estate investing, there's REITs that you can own for partial ownerships of starters. You can get into Fundrise. I think I've used Fundrise for a short time. I think I may have a link. I'll try and pin it down below. Build capital, start small. Even in the stock market, it's well worth it. Remember 2013 to 2018, I was kind of building up my money back up after having purchased a home, having purchased a car, getting a job in the States, and just kind of building back up where I needed to be. So final thoughts: real estate can still work in 2025, but you really have to work and find that right deal. It does require a ton of planning, a ton of patience, and having capital reserves. I keep reserves of anywhere from $10,000 to $20,000 just sitting in a high yield savings account, just specifically for my real estate business, that I do not touch whatsoever, because you never know if something's going to come along and have some $10,000 expense at any time. So always have reserves for dealing with that. But make sure that if you are having reserves and you have to have it available, that it's in some sort of high yield savings and account. Another thing here: if you guys would like to join the $1,000 investment challenge, we have started now 4 weeks, going strong into it. Every Thursday there's a brand new video. You guys can get a free $1,000 investment tracker downloaded down below. I'll have a pinned comment section down below. All you got to do, sign up, and you'll be sent to a little page here where you can download the investment challenge tracker. Right now we are in week 5 now, so we've just crossed over $127 invested in the stock market, soon to be quite a bit more, around 150 plus. So right now, by week 40, we should hit our $1,000 deposited into stock market. And by the end of week 52, it'll be really interesting to see where exactly we end up at after having invested $25 into the stock market on a week-by-week basis, along with that natural capital appreciation. So that is going to be it for this video. So real estate has been great for me overall, but again, it's not always passive and it's not always profitable. It takes work, risk, patience, and in 2025, I would still consider it, but only with the right deal strategy and expectations that it might not appreciate. You'll want to get that cash flow. So yeah, that's it. Thank you guys for tuning in. Subscribe if you want more financial tips. Give this video a big old thumbs up. Would really appreciate it. And that is it from me. Thank you all for tuning in. I will talk to you guys in the next video. Bye-bye.